Hello, and a massive hello to everybody. Hope everybody's having a great 12th of March 2017. No trade calls and recommendations. Every response for their own stuff. We're doing this for educational purposes only. So remember, time has changed in the US. And again, we're in for a very, very busy week. So again, before I forget, all the guys who are on the 50 Scouts group, so remember you'll get heads up for an invite email towards the end of the week for a free pass to the webinar on Friday. So what's going on this week? Well, again, we've got a lot of stuff, a lot of central banks on the wires, a lot of stuff on deck. So on Monday, we've got Draghi speaking. Tuesday, apart from Chinese data and some U.S. data, we've got basically, if I remember correctly, we've got Trump and Merkel are going to have some drinks in the White House. So that could be very, very interesting. And the other thing is the rumor that Article 50, in terms of Brexit, could be triggered as early as Tuesday. So keep that in mind too. Wednesday, I mean, we've got a gazillion data points across the board, both from the UK and the US. But again, it's really all going to be about the FOMC. And don't forget that after the FOMC, you've got the GDP out of New Zealand. Now, markets pricing in 100% certain of rate hike. I'm never comfortable when the words 100% and market are pronounced in the same sentence, but it's going to take something very, very big for the Fed not to hike, I think, unless the market's down like 10% into Wednesday or something. It's pretty much a done deal. We'll have to wait and see, but that's what the market is expecting. So we don't think that's the real issue. The focus is going to be on what Auntie Yellen says, right, and how hawkish or dovish she is for the rest of the year. That's really what it's going to be about. And as we said going into the non-farm payrolls, we said be careful because when everything is priced in, there's nothing much that can, usually it's buy the rumors, sell the news, right? So we had that, beautiful opportunities on the USD, on Euro, across the board on that non-farm payrolls, right? Fairly classical action. Then, as if that wasn't enough on Thursday, keep in mind that we've got, apart from Australian data, we've got BOJ, right? We've got BOE, we have the SMB, right? And we've got more data out of the US. And going into Friday, we've got also some other data points. Now, another thing with a lot of people, or I haven't seen a lot of people talk about, but I would definitely keep in mind is that we also have on Thursday is the deadline for the raising the debt ceiling. So again, there's an awful lot of stuff going into this week. Okay, so didn't want to sound like a squawk box, but I think it. Sometimes it's really important to go through what the calendar is. Now, looking at equities, we're our outlook is that we're in the process of putting in some kind of a intermediate top, right? So if you look at something like the SPY, right, what we said, as long as we don't take these highs out from a closing basis, whether day close, week close, we expect this to try and come right back down, get a little bit of a correction going, right? And it's by no means anything completely crazy. I'll move back down. There will only be about a 4 or 5% correction, so it's not that big of a deal, right? And we've already expressed that views through a couple of trade ideas and trades. We've pretty much talked about them here live, before they triggered and in the live sessions, and that was the IWM, right, the Russell. So basically, looking at the failure to hold above this breakout zone, close below, we're looking for this to come right back down into the opposite side of the range and potentially back into the 125s level, right? And these are good examples of looking for asymmetric risk reward opportunities, right? You've got a chance here to trade on the move back with about 1.5, 1.6 risk, for an 8-10% move if it plays out, and plenty of opportunity to book some here. So quite interesting action. And this is one of the tells we've been talking about, similar to the action on another trade we actually talked about here before it triggered, EEM, right? Also, this is a good example of trying to looks like trying to stock action. If you look at this on the weekly, right? Got a nice little close here on the weekly back below, chance to trade this to the downside. Okay, so there are a lot of interesting opportunities, but we're not here to talk about what was. We're here to talk about what's setting up. I think gold's a particularly interesting level here going into the week, right? So actually, let's look at the futures contract. There's a tendency for gold to rally on hikes, right? And also in terms of the seasonals, we'll be going towards a little bit more interesting dynamics here. And what's happened here, we've moved right back down into this previous support zone, right? And not only an area which has been a very interesting support zone, but if you look at also the latest move from lows to highs, we're right back into the 50 back of this move, right? So if you're looking to try and position yourself in terms of some more long gold exposure to move right back up into test this trend line, possibly all the way back up into the 1300s if you're trying to get some exposure, trying to get some hedges on in case we get a correction on the equities. We think this is a particularly interesting level for gold, and we will be looking at this week. You know, we're already positioned on this, but we'll be looking to continue to build some kind of long exposure here into this week, and any dips, especially with failures to close below here, will be more and more interesting for us to try and build some kind of exposure. So I think this is probably one of the most interesting charts going into the week. Another interesting chart we'd be very focused on are the bonds. So you can look at the ZBs or you can look at TLT, but basically what we're saying is here, it's similar to crude, right? Remember we were talking about when we're in those highs, we said, you know, as far as we're concerned, it's hard for us to understand why anybody would want to get long into that brick wall on crude, right? It was just an accident waiting to happen. And it's the same thing here in terms of the ZBs, right? Or the bonds. You know, we're not saying these are going to go sky high, but there are a lot of things that can happen, and these have been sold very, very hard, right? So we wouldn't be surprised even on the actual raise or whatever to see a little bit more of an extension to the downside. Maybe the market is gonna clip some lows and try and break this level, but we think that going into the week, right, there will be a very interesting opportunities to try and buy bonds, whether it's at this level, whether it's at this level, to play for some kind of a healthy correction or unwind of this move, right? Similar to what happened on Friday on the DXY, on the dollar. Okay, so those are two really interesting things. Unless you're already positioned on equities, we think trying to play some kind of upside or positioning for some kind of upside in the next week's on gold, and to play for some kind of relief rally or profit taking on this aggressive move down on the bonds. Now, going back into the Forex side, a couple of things a lot of people will be looking at is one is cable. So no big change here. I think anybody who watches these outlooks knows we've been short cable for a long time. We're looking for this to try and move all the way back into this 116 level, 123 extension of that move down. Now, the tricky thing here is that there could be a lot of headline risk and a lot of wheeling and dealing on whether the Brexit is triggered. It could be, you know, sell the rumor, buy the news. We'll have to wait and see. But so far, the action is very bearish, right? And we've said as long as we close below those 23s, we'd expected those 121.50 to come in play, and now the big fight is this 121.50, right? This is a huge level from a closing basis, and it's much easier to see if you look at it on something like a weekly chart, right? So I don't know why this trading view has been a little bit slow lately here. It's taking a little bit of time to load. Let's hope it can cooperate. There you go. So you see here how clear it is on the weekly, right? Every time we're probing back below this level, we're getting bids supporting or shorts covering, right? So very, very interesting. The only thing is watch out, because if these go, if these levels go, well, then we'd expect that to come very, very quick, or at least for it to try and print new lows. So we're still holding short, but we think, you know, there's already a big part of the move has been played out, and we're definitely not going to be stubborn about it, right? So we'll have to see what happens. There's a good chance to see some kind of acceleration this week, but we're not married to this position or any position. And if we can't get any traction below this 121.50, we'll be more than happy to be nimble and cover these positions, okay? Now, Euro, no big change on Euro. We've been talking about this since the beginning of the year, since going back into last year, and we thought the most interesting trades this year were going to be to get long Euro, try to play any kind of move lower to try and play corrective bounces, as most people's probably position off guard, and we expect to have the most interesting swing opportunities, at least as we were going into the beginning of the year, right? As we're trading around 0550s, we're saying it doesn't mean it can't go lower, but if we're looking for a decent move, and by that we're talking about 5, 10, 15%, 5, 10, 15% move, we thought this was going to come to the upside rather than the downside, or at the very least that with all this trading here, the asymmetric risk reward to play that was definitely longs, not short, as even if we tried to play the short for parity or something, like the stops would have to be much wider and also, you know, not that interesting for us. So this looks like it's trying to play out. Now keep in mind, you know, I'm not going to start to talk about all the fundies mumbo jumbo out of Draghi, but there's clearly a potential that, you know, Europe is starts to follow the US. So again, there's a lot of possibility to surprise for a squeeze to the upside. And keep in mind, as we've discussed in the past videos, a lot of people have been trying to hedge short exposure on French elections, Dutch elections. By the way, I forgot to mention Dutch elections this week too, right? So if we see that the possible threats don't materialize, that's going to be even more potential for a squeeze on Euro. So be careful, but a lot of positioning and squaring here, but clearly no change for us since the end of last year. The risk is clearly to the upside, not to the downside. And as far as yen is concerned, a lot of people asking about yen, and again, there's no big change here. We talked about the fact that we were stuck inside this range, and we felt there was not going to be a lot materializing unless we got something clear out of the Fed or we got some kind of a strong move on the equity side. And here, it's just buying time. Is it a surprise that it hasn't accelerated higher or lower ahead of all the event risks this week? Absolutely not. But it does. It's similar to crude, right? It's very hard to understand why you'd want to be chasing it here when you've got have had so much overhead supply and such a big resistance here, the 116s, and that's why it's a tricky one, because you've got a lot likely of sells into this 116s, and you've got huge protection back down in these 112s, right? So what that means is that in this range, there's very little edge. I mean, there are a lot of nice opportunities, don't get me wrong, intraday, but if you're looking for the next big move, you could argue your case either way. It's very tricky unless we get a strong break outside this range. So we'd still be tactical, but again, here the risk is clearly for all these longs to get caught off guard and for us to see a little bit more neutral move back into 114. But again, will that mean a lot? Not really. We have to get through this week. So remember, in terms of this week, it's more of a question of how we end rather than the positioning and squaring and wheeling and dealing intraday, right? So I hope that was useful, guys. I'll post a recording. Have an awesome one. Thank you for flying with 50 as usual. Thank you so much for sharing. I didn't do a morning call last week simply because it didn't seem that interesting, so I'm not going to do one if it's not that interesting, if we don't have that much to say. I'll definitely do one this week if there's something interesting. The plan is to do it on Wednesday into London. But again, if the market is just at a standstill and nothing has changed to what we've discussed and the market's just waiting for FOMC, then there's no real point, right? But again, thank you so much for all the support. Have an awesome one, and I hope everybody has a good week. Remember, sometimes that the best trade on the board is the one you're already in, and sometimes it pays to play strong defense, okay? Bye-bye, guys.